Good morning, it's Jeffrey Cohen. Monday, July 11th. I'm an investment advisor representative with U.S. Advanced Computing Infrastructures Incorporated, an Illinois registered investment advisor, here to talk about the markets today. Here to give you the overview of what's happening. We see a lot today. I'm not sure. It's not all good, not all bad, but we're going to have a very, very specific investment idea for you if you're a U.S. citizen, up to $10,000. So let me start with the good news. You and Skookum, 16 hours ago, I give him credit for bringing it up. Thank you, Skookum. I can lock in I-bonds, which are U.S. savings bonds, I-bonds, inflation index bonds, for 9.62% for the next 6 months. What in the actual heck is going on here? So, let's talk about that. You can go, and this is an investment advice for you. You go to treasurydirect.gov. You can purchase I-bonds at the current rate through October 2022. Rate is good for 6 months from when you purchase the I-bond. Learn more. You have to open up a Treasury Direct account. We have. I've been investing in U.S. savings bonds 20 years already. I love them. And so here's one of the best things. You put your money in a bond, it's gone. You can sell them at any time. If you can hold the bonds for like 5 years, then you get all the interest. If you hold it for less than 5 years, I think you lose 3 months of interest. But if you buy them, there's all different kinds of bonds. There's I bonds, there's double E and E bonds. There used to be H and double H bonds. But you can just put a little bit amount of money. It used to be $5,000 a year. And I would do this more for my kids. I'd be like, you know what, I'm going to buy some bonds. I'm going to put them away, whatever. But you can earn risk-free, as long as you trust the U.S. government to pay its debt, you can get risk-free money at 9.62% interest rate. I don't know about you, but I'm scraping, running a server till I'm blue. I ran the thing all weekend. I was doing experiments, simulated bifurcators, genetic algorithms, Monte Carlo, even the D-Wave simulated annealer. I ran all kinds of stuff to try to stretch the edge, and the edge is just poof, going away from our model. And so I say, if all you have to invest is $10,000, put it in I-bonds, and then you can just go watch TV or do something fun, because it's the best investment in town. So, number one, buy some I-bonds. Love it. You should love it too. In fact, I'm going to buy I-bonds, I believe, this week. I'm going to go find 10 grand somewhere, and I'm going to put it in I-bonds. So you should do that. It's great. Number two, foreign exchange. So first off, foreign exchange is the buying and selling of currencies. So normally, like if you're in Indonesia, right, and the ringgit, or if you're in China with the renminbi. So it's funny, I've traveled to all these countries, and I have some of the old currency, but you would never think that you're going to take a $20 bill and invest it in Canadian money and then somehow make a profit, right? Because we're dealing in small numbers. We have the money in our wallet, right? Maybe you go on vacation, you come back with some Canadian money, and you hold it. That's not really investing in currency. So for us, for the regular people, currency is about going somewhere, maybe on vacation, or buying a product, or having your company do business. So we used to do business in Canada. We were paid in Canadian dollars. We had negotiated the price in Canadian dollars like 6 months before. And so when we were paid in Canadian dollars, if the Canadian dollar was weak or strong, our business made money or suffered. We're not big enough to be like hedging foreign currencies. So when you see the US dollar to euro at $1.95 of a penny. You look at that and you should be thinking, oh my God, when's the last time the euro dollar broke a dollar? When was the last time you could buy a euro for less than $1? And I will tell you, it has probably been a really long time. I'm going to look. I bet you it's the 90s. I bet you it's the 90s. I bet you if we go back, I don't even care if we do a yearly chart max. Okay? When's the last time we were under $1? We broke $1, it looks like, for a short period of time in 2012 and for a very short period of time in 2008. But it hasn't traded below $1. 2004, 2004, according to Yahoo Finance. So it's a really long time. So you should know that something historic is happening. The US dollar is the safe haven. Everyone talks about the US dollar losing its power. Well, here's the deal. The US dollar is the hot commodity right now. So if the US dollar breaks, so if the euro breaks $1, I think that's a big deal. I think what this means is that the U.S. government is people believe that the U.S. government is going to break inflation. It's going to stop inflation by raising interest rates. So, by the way, if you're a European and you could, I don't know, somehow invest in your I bonds, you could sell your euro into dollars, invest in I bonds, earn 9.62% risk-free. After 6 months, after 5 years, whatever, sell your bonds, buy back, wrap it up, right? So you can invest in risk-free or low-risk U.S. investments, U.S. treasuries, and do great. And so that's really important, is that people are betting that the U.S. will truly be that safe haven. It's so funny because being in America, we deal with this all the time. We have all this politics, divisive politics. My God, we had a dinner party, and I thought our guests were going to leave because I brought up something political. We weren't even really on different sides of the issue, but just anything political, they can't talk. It's too crazy. So, what I would say is U.S. safe haven investments are going to be hot right now. So, with the currency this strong, I don't know what to do, because normally when the US dollar is this strong, stocks go down. Normally. But I think this is an abnormal situation. So we're going to store that aside with our I bonds. Just a personal note. I'm wearing a Middle Eastern shirt. I bought this in Dubai. And yesterday, I exercised like crazy. So I'm 54 years old. Not in great shape. I weightlifted. I bicycle rode. And I ran 4 miles in 85-degree weather. So I'm feeling fit and strong. And I want to wear the shirt. But I got to tell you, deep down inside, I'm in so much pain. Everything's sore. But that's okay. We're just going to deal with that. All right, what else are we going to talk about? So there was a tweet that I saw this yesterday too. I just want you to think about this for a minute. This is a run on a bank in China. And the police come and they break it up. A run on the bank in China. And by the way, it's not some little bank like Bob's Bank. It's Bank of China. The Central Bank of China has frozen deposits in a couple of its branches, a couple of its cities. And the people can't get the money. And what they said was, oh, we're having system upgrades. Well, either they lost the money or they lost the records or something. A run on the bank in China. Run on the, I just want you to say it. There's a run on the Bank of China. There's a run on the bank in China. And when we look at world indices, let's take a look at the Hang Seng is down 2.77%. The Shenzhen is down 1.87%. The SSE is down 1.27%. Australia was down. This is our last night. This is your yesterday. The DAX is down almost 1%. The CAC 40, so the DAX is Germany. The CAC 40 is France. ESTX, I think, is Spain. Not 100% sure. The Kospi, love our South Korean colleagues here, down almost 0.5%. The UK is down 0.4. Euronext is down. The FTSE, which is UK, is down 0.3. Jakarta, Indonesia, is down 0.27%. We love Indonesia. We love Jakarta. So, yeah, I need to go. I like the Indonesian people. I've been there once. It was nice people. Loved it. The VIX is up. It's interesting. The fear index is up 1% or 0.26. Look at that. What do they know that you and I don't know? Why is the VIX up? It's like on a 15-minute basis. It's like over 5 days. I still can't see it. So what's interesting is the VIX came way down. It was like 28. So, but it's peekabooing this morning, right? So what are people worried about? Are they worried about the run on the bank in China? They might be. I know they're not worried about I-bonds, savings bonds, but so I would say we've got some trouble there. We've got some troubled waters with the Bank of China, and we got some troubled water with the VIX going up. So the VIX is the volatility, the implied volatility, the believed volatility, the priced in volatility of stocks. And normally, I mean, on the upside, it's great, right? Because volatility on the upside means it's going up, baby. But it also could be going down. Volatility is not your friend if you're an investor. A long-term investor wants smooth sailing. Up. Stocks going up. They don't want choppy. Because here's the problem. I go to the bank because I need money. Oh, I need money. I got to buy something. I got to buy a new car. This happened to me recently. You know what happened to me recently is I had to pay my property taxes, and I didn't have the money. Not handy in my checking account. Property taxes are a lot of money, right? So I had to go, and I had to go to my savings account. But do you know I sold stock in order to pay my property taxes? And so just want you to think about that. When I needed the money, I got whatever the stock market was at. And so if it was up that day, that month, that week, I did great. If it was down, I did poorly. And so when the markets move, when you need your money back, you may not get it at the right price. So people don't like volatility. Volatility is bad. Volatility hurts you if you're a long-term investor. Volatility helps you if you're an options trader and you're selling options, right? But for normal people, normal investors, retail investors, volatility is really not your friend. And so when volatility goes up, people push the price of stocks lower. So I explained that to the missus recently. Mrs. Chicago Quantum. She's like, Jeff, explain that to me again. This doesn't really make sense to me. Volatility goes up and the expected return goes down. And so that pushes stocks lower. I said, yes. You can kind of see it here, actually. If you look kind of carefully here, you can see it in the charts. So, and I said, honey, that's right. Oh, What do you have on the uptrend for these next few days? I will look. Quick answer is QQQ. The big tech stocks are consolidating and likely to rise or fall a lot. So QQQ or some of the big guys like Apple, Microsoft, and others. The other thing is find some stocks with low beta, low risk, like Amphenol. So our model is starting to pick lower risk stocks, more lower risk stocks to hold during what is expected to be a painful and disgusting period of time. Let me go back to my esoteric discussion here. So as the VIX goes up, which it is, stocks are going to drop. So any stocks that are like hot money stocks right now, you want to be out of. So I'm gonna stick to, thank you, by the way, Hancho Sham. So we have a bunch of indices that we follow, that we made and we follow. The one of them is money managers. God, if you want to know how the market's going to do, look at the money managers because they make money on the market. They're like a second order derivative. They're down pre-market. Let's look at our crypto and mining. Oh, blood red, baby. The only thing that's not red is a data center operator called Soluna Holdings. So it wouldn't be in crypto or physical miners. Let's look at trucking and transportation. Oh, red, red, red. All right, so today's a crap day. It's going to open lower. Let's look at retail. Retail, who knows, right? You're buying stuff. Alibaba was lower in Asian markets, set to open 4% lower in the U.S. What's interesting is cannabis is up, and Party City is up, and Q-Rate retail is up. So there are some, what I'll call value stocks, which look to be in demand this morning. From Victoria's Secret down to Hydro Farm. I'm going to keep that aside. I'm going to share that. I'm going to come back at the end. We're going to look at those. So there's a couple of specialty retail. So what else I noticed when I looked at the futures, it's a bet against the economy. So gas is down, copper's down. Remember we talked about the dollar is up. Oil's down, gas is down. So, but also bonds. So what's interesting is the bonds are trading higher. So it's a flight to quality. It's a flight to safety. This is actually good for regional banks. This is good for banks. Some banks, right? Banks like it when the bonds go up. So we're going to take a look at some other stuff. The VIX is coming higher this morning. So I got to point that out to you because when the fear gauge starts to trend higher, that's typically rough for the market because you can't have a stock market rally. You really can't have a stock market rally if risk is high. They say markets climb a wall of worry, and they take the stairs up because they slowly rise, but they take the elevator down. They fall very, very quickly, and so I don't like when the VIX goes up. The VIX has been down now for like a month. That's great, right? It's been a really good month. So we'll see if the VIX goes up. What else we got? Talked about Alibaba, really crapped out. I gotta look at the. All right, I have a different place to look for that. So we talked about market being lower. What else we got? Let's do a quick look at the tweets. Wow, there's nothing going on this morning worth talking about. There's nothing to talk about except for big ladies. Oh my God. Look at that picture. Those are enormous women. Holy crap. I gotta like that picture. That picture just changed my whole life. That's a huge woman. Look at that. Oh my God. That's got to be a special effect somehow. That's crazy talk. All right, fine. So there's nothing on Twitter worth talking about. How are we looking at the futures? Let's go back. They're set to open lower. Got it. And it looks like economically sensitive commodities are lower. We'll refresh the currencies. We're still under $1.01 for the euro. That's the thing to watch. Look at interest rates. Where are we with interest rates, Jeffrey? Give me that fixed income love that you got. Fixed income love. There's nothing better. Actually, there's a lot better. There's a love of somebody that you care about. There's a love of your husband or wife. That's something to think about. Oh, and there's also mortgage-backed securities. So, look at the fixed income. You know me, I'm always looking at the mortgage-backed securities. This should be at the ticks level. Yeah. So we're at 99 and 31 30-seconds. So that's 4.5-year mortgages. 4.5% mortgages. So mortgages that on average are yielding 4.5% are trading below par effectively. Mortgages that are trading at are on average were sold at 5% fixed, conforming 30-year fixed, fully amortizing mortgages are trading at 101 and 17 30-seconds. The Ginnie Maes, a little higher, I think because they pass through money faster, they're a little less risky. Mortgage-backed securities are significantly weaker so far today, down 8 ticks and 8 30-seconds. And so look at that. 30-year fixed rate mortgages are up to 5.84%. Now the Federal Reserve also publishes mortgage rates, and so but I trust Mortgage News Daily. I like the data source, actually. It's great. So let's take a look. 1-month treasuries are now 1.52% interest rate. Let's look at it over 5 days just to make sure we're not crazy. Yeah, they're up. So 1-month treasuries are up, which means we raised the risk-free rate of our model. Raised it up because you can get higher interest rate in relatively low to no risk investments that are much higher. Let's look at the 30-year bond. So what's interesting is the 30-year bond is down. So what that tells me is people are still thinking recession. Recession, I need a safe place to put my money for 30 years. They're not holding them for 30 years, but they're holding them for a while. And they think that interest rates are going to fall because people don't have a rate of return on their money. The 10-year is also down slightly. It's up, but it's down slightly. So what I would say is that this is generally speaking bad for the banks, or good for some banks. But I have a feeling that run on the bank in China, not helpful. So this is an ETF. The SPDR, the S&P 500 Regional Banking ETF, is flat. If we look at it over a month, you can see it's down. It hit 57, hit 59.5. It's actually trending higher over the month, but over 3 months it's down. So regional banks, not great during a recession. This is a financial select sector spider ETF. And XLF is more general in financial services. The other one was more regional banks. And so if we look at 5 days, you look, it's been up. If you look at it over the month, it's been trending higher. It actually reached its low middle of June. Trending higher, but down a little bit this morning, less than 1%. And so I would say financial services probably not going to be green today, probably going to be red today. So let's take a look at, go home, go here, regional banks, zoom on in. Regional banks are red for the week. Regional banks are green. I've seen that. For the month, regional banks are blood red. 3 months, regional banks are blood red. 6 months, regional banks are blood red. For the year, regional banks are red. The large diversified banks are red. So banking has been a terrible place. So banking has just been a bad place. For the past year. Good for the past week, though. Recovering a little. Not sure I would invest in regional or national banks this week. Okay. It's interesting. So where are we at? So Koifin doesn't do a pre-market thing, so you can just see where we're at here. Alibaba pre-market, 116. China fears return. China fears. I see that. The VIX. VIX is rising. Pre-market. VIX is rising. When the VIX rises, the market falls. This is what it is. Big ladies. I can't believe how big they are. It's enormous. I don't understand that picture. I'm going to have to tweet that one out. That's crazy. That's crazy. Big ladies. So, I'm blown away. She must have been 9 feet tall. 9 feet tall. There's a movie about that. The Attack of the Big Women or something like that. All right. So, 30-year treasuries at 3.225. We'll just see. We'll see if that works. So now we look at Corbis, one of our favorite stocks, a large holding of ours, is up. It's 31.50 pre-market, and we like it because we think that the I'll tell you what we think. I think it's going to get bought by somebody else. It's going to get bought for like $7 a share, $5 a share. Everyone's going to get rich that owns Corbis. But it may not happen this year. It may happen in 5 years. That's okay. So that was it. I just covered where we're at in like 30 minutes. So let's go back and take a look now at trending stocks. No, that's not what I want to do. We'll keep one eye on the futures. We're going to clear all this stuff up. Right. Interest rates are down. So that is good for certain banks. And interest rates are down is good for stocks. So that's good for stocks. It's nice. We don't know how the market's going to open right there. It's not clear. If we look at FinViz futures, you would say the market's going to open lower, about 0.5% to 1%. So that's something to look at. Chinese bank stocks. What are some of the Chinese banks? I mean, we don't invest in that, but that's tough stuff. Corbis is up. Banks are either flat or lower on the ETFs. Not a good day for banks. The VIX is up. Fear is up. Fear is up. How are we doing with the futures again? So futures are looking pretty negative. Crude oil is down 2.5%. Copper's down 2% to 346. But let's be honest, copper can trade as low as $2. Copper's no steal at 345. So I think where we're going to end it is we're going to go back and look at our indices. What do you have on the uptrend for the next few days? Let's take a look. Where are we at? So to answer your question, Corbis is on the uptrend. CRBP is on the uptrend and likely to rise further in the next few weeks. I would look for 50 cents on this stock by August 1st. I see it, Corbis. I see it. What else do I see? On the Walking Wounded, Coinbase, Party City, right? So when the market falls, it punishes stocks that have already fallen. So I think you're going to see more punishment of stocks that are already down. So I would say fear of missing out is a cost-effective strategy today. Stocks that have fallen will continue to fall this week. It's an opinion. Stay away from the downtrodden. That's what I would say. Now, what's interesting is cannabis is still up. Cannabis is never up, right? So cannabis is up. I don't know why that is. Cannabis retail, like infrastructure retail. Look at that, Citigroup. You know, Citigroup almost hit $1 at one point. So, and then it split 9 to 1, so $9. So don't be running into Citigroup saying, "Oh, it's a steal." It's not a steal. A lot of these stocks have a history of going up and down, really large amplitude moves, and so yeah, I'm not jumping in any of these. Walking Wounded. So banks where the prices should rise. How we doing? U.S. Bancorp is down pre-market. Comerica is down pre-market. But Carver, which is extremely risky, it's like a meme stock, is up, and PNC is up slightly. Money managers, let's see, are they still down? Yeah, all of them that are trading pre-market are down. That's like a specialty retailer. I really want to see, so athletics are actually Lululemon. It's not just athletics. You get some really stuff down in retail, but what's going up? Again, Hydrofarm, CarMax, Grow Generation. Big Five Sporting Goods. That's a very low market cap stock that you may want to look at. It's interesting. What else we got? Oh yeah, crypto and miners as a group lower. It's because Bitcoin has come back to about 20,000. Trucking and transports down. Semiconductors. This is the canary in a coal mine for this market for the past year. So actually, computers and chips are down. So I guess people are buying fewer computers. Chips and semiconductors down, with the exception of a really, really small cap called Excelis. So, I mean, the market's down. Broad-based decline today. So, that's it. It's a down day today. So now, while we're just like hanging out, I'm going to take a quick look at the QQQ because our model is starting to pick some large cap tech stocks as potentially being stocks that you want to be in. So let's take a look. So for the past year, one day, I put it against the S&P 500, and you can see that it overperformed the S&P 500 in 2021, but has been underperforming the S&P 500 since January of 2022. So it has been declining faster than the S&P 500, and I started drawing channels, and you can see that recently the market flattened. So you had a period of... So the gray is the S&P 500, and the candles are NASDAQ. And you can see how the candles are playing out here. So this was a downtrend. And I guess you can draw here, or you can even bring it down a little. Draw another channel there. Where's the top? There we go. You channel it up. What you're really seeing here is you're seeing that the market could hit its kind of trend line, which is lower. But what the market has been doing, we're going to focus in more, is it's actually been rising. It's actually been a little prettier right there. And so I don't know. I mean, it's still a downward move, but it's got a nice channel, and it's hitting up against the channel. And so I guess the real question is, if we look at the NASDAQ, it's going to be just like the S&P 500. Let's clear the drawings. Let's do a quick, just really simple draw. Okay. Market went up. Yay. Market going down. Boo. Same for all the indices. The S&P 500 is actually outperforming the QQQ. Our model likes QQQ stocks because they've been underperforming and relatively flat. Look at that flatness right there. You've got like a, it's weird what you got right there. See that? Boom. And boom. Right there. So you're going down, you're flat, you're kind of getting a nice little support range, like a consolidation range. The question is this the bottom? What do you think, guys? Is this the bottom? When it hit its lowest day, there was the least amount of volume. And it rose on a higher volume. So I could say it almost looks like a little bit of a head and shoulders. Oh, man. Maybe it's the bottom. You know, in your 50s, you got to keep exercising. But it takes you hard. It's harder to recover. I'm in so much pain this morning, right? But look at that. That is a very interesting focused chart on the NASDAQ 100 because it says maybe we're hitting a bottom. Maybe. That weakness, that volume weakness, so it dropped and then it kind of recovered a little, right? Came up, came down. I don't know. It's hard to know where we are, right? It's almost like it's just a consolidation pattern. It's consolidating. It fell. It's taking a little break. I can imagine that happening, right? We don't know what's going on. Interest rates, inflation, the COVID. There's no info, right? And so I can see this. I can see that we're in a flat period. And that's fine. Now, do you make money in a flat period? I don't know. Do you want to make money in a flat period? I don't know. Let's look for our COVID numbers. Still flat. 5,200 new hospital admissions. 7-day moving average cases is 106,000 cases. So what's been happening is the number of cases about flat. Number of hospital admissions is up slightly. So COVID is not really spiking or peaking. So that's good. Any other data that could tell us something? How about if we look at Fred? When are we going to see... When are we going to see like money change? Velocity of money. 1.122. So the velocity of money isn't changing yet. Okay. That's interesting. That's an inflation thing. How about just the monetary base? Monetary base is coming down. Well, but since 2021, let's look a little closer here. Yeah, monetary base is coming down a little. That's helpful. Looks like they're trying, right? Let's look at M2. I like M2. M2 is a good indicator. Weekly. No, it's all monthly. Yeah, I sure would like to see it weekly. If you guys are listening. So you look here and you see the monetary M2 climbed like crazy. Hit a peak in April. I guess that's when they realized inflation really is a problem. And then they came down. But not by much. We're where we were in February. So it looks like they're trying to bring the money supply down a bit. But I'm not seeing very much here in terms of action on money. So what else? Let's take a look at... could look at consumer prices. Here we go. Seasonally adjusted through May. How are we doing on inflation? Wow. You see, we're used to nice, slow, steady inflation. And when it rises, you get these recessions. Inflation and recessions go hand in hand. It's dangerous. It's dangerous. So we come out more recently and we see... Now, in a COVID recession, prices fell because we had all those supply shocks. So take a look at that. Inflation just keeps a steady rise. You need to see that flatten out. I'm not learning anything from the Fred data. I want to see the assets. I want to see the Federal Reserve Bank assets. Total assets of the Federal Reserve Bank. That's what I want to see. Have they sold off any of their bonds? And you can see there's just the tiniest. We got back to March. Maybe February, right? So money came down to February. Looks like assets are coming down just tiny, tiny, tiny bit. So that says the Federal Reserve Bank is doing the tiniest little bit it can to stop inflation. Still not a lot. It's still very gradual. Let's take a look. Banking. So financial services is down 3/4 of a point this morning, pre-market. Banking ETF, unchanged. Corbis, 3150. You heard it here. Corbis, through the roof. Shoot the moon. We'll look at two stocks that we personally have an interest in. Lakeland Financial, unchanged. Bank of Hawaii, unchanged. And so let's go back. We'll cycle through one more time. The VIX, 2644, up slightly. It's bad for stocks. Futures are down. And I'm just going to set up NASDAQ Book Viewer. We're going to log in. Please don't steal our password. Let's look at the spider. Let's look at the QQQ. Uh-oh. Uh-oh, bad man. QQQ. And then let's look at IWM. And then we're going to take a look at Corbis. Corbis pre-market's got some it's got some legs there. I like it. All right, I want to thank you for watching. If you like it, if you like what we talked about, if it was helpful to you, hit the subscribe button. It helps tell YouTube that you like the video, and it shares the video. We do not advertise our videos. We do not pump our channel. We don't make any money from making these videos. It's all for you, and it's all to help us to think through kind of where the market's going. Just remember, the edge from our model dropped precipitously lower. It's picking a lot more stocks. It's harder to find an edge in our model from a risk-return basis because the risk in the overall market keeps increasing. So that was the net. So if you liked it, hit the subscribe button or drop a chat. Make a comment. That really helps us. And we like to respond to the comments. It also tells YouTube that you liked it. So thanks again for watching. Appreciate it. You take care now. Good luck in the market. And the way we started was talking about savings bonds, I bonds. If you're a U.S. citizen, it's a great place to potentially invest up to $10,000 a year. Mortgage-backed securities, lower. A lot lower, significantly weaker. 30-year fixed rate mortgages, 3.84%. That's going to do a lot of harm to the housing market. When we look at our pre-market, and I like to look at the money managers because money managers make money when the market goes up. Pre-market, down. Nobody's up in the money managers. Euro dollar. Looks like it's testing the buck. It's at $1.79 of a penny. Buy U.S. savings bonds, I bonds. Right now, they offer a guarantee for 6 months of 9.62%. It's crazy high. We look at the world indices, and they were dramatically lower across Europe and Asia. So, not a good time. We look at commodities. Down, but elevated. Down, but elevated. So if you got a recession, commodities probably going lower. Foreign exchange, we looked at this. U.S. dollar, very, very strong. Except for the Japanese yen, but look at that. No, that's not true. It's the other way. It is. Dollar strong. 137.54. Japanese yen for $1. The U.S. dollar is the reserve currency. It's a safe haven. Everyone's running to the safe haven. And actually, they're running the 30-year bonds. They're running the 10-year bonds. And people are demanding and getting a much higher interest rate on 1-month money. So that starts to look like an inversion of the yield curve, although it will take some time to truly invert. And last but not least, Koi Fin. Super nice set of charts here. and good way to track the market. Thanks very much. Subscribe button. Spread the word. If you like the chat, if you like the video, just let people know. Really helps us. Thanks so much. You take care now. Good luck in the markets. Bye-bye.